Hey, what's up, guys? It's Richard from Day Trade Today. You've probably seen me on Instagram or YouTube and you got curious about stock trading. So I decided to give you free access to this section right here of the course and allow you to understand what the stock market is, how we're going to make money off the stock market, and the rest of the course really goes into specific detail on what systems to use, what brokerage to use, and we'll get into that in another video here now. So let's break down what the stock market is. I think it's really important. For those of you that don't know what the stock market is, listen up, take some notes. For those of you know what the stock market is, then just move to the next video and you can keep on going. So for those of you that don't know what the stock market is, it's pretty simple. It's where publicly traded companies, so publicly registered companies, meaning that they've decided to open up their ownership to the public. So they've said, okay, in order for us to grow, we're going to need investment. And those investments come from investors. So for example, if you're an investor, I'm an investor, we would decide, I really love Apple. I want to invest in the company. I think it's going to be a great company. They're going to have another iPhone coming out. They got the watch and they got the glasses. Okay, so you would be convinced that that is your investment, your ideal investment in the stock market as a publicly traded company. So what do? You go look up Apple, right? And once you look up Apple, you can then decide, okay, based off of the value that it has and other indicators, which we'll talk about in the remaining course, you can decide if it's too high to buy or if it's too low to buy, if it's just right to buy, and then you can go ahead and buy it. Now, this is where the stock market comes into play, right? Because you have to have an exchange in order for you to buy those shares. So typically what will happen is a broker will come in between you and Apple. So let's say, I'll give you an example. Let's say Thinkorswim or Robinhood, right? A lot of you probably trade on Robinhood. So if you're using Robinhood, right, Robinhood will then allow you to buy shares off their platform, through their platform, and they borrow or have already bought or are buying the shares from Apple. It really just depends on what they have on hand. Kind of like a store, right? Your broker is kind of like your store of stocks. And if they don't have it, they'll borrow it or find it from somewhere else in the market, from other exchanges and from other brokerages. Okay, now, what are they actually getting for you? Well, they're getting shares of a company for you. So what they're doing is they're saying, all right, so Apple has 100% ownership in some capacity. From that, let's say there's about 20% that the public market, like you and me, can go and buy from Apple. And so 20% can be owned by the public, maybe sometimes more. And with that, what happens is that you are now exchanging your cash, money, through your brokerage to then buy Apple shares. When you buy the Apple shares, you're buying it at a set price, or you're forward projecting the purchase value that you want to buy in at. And we cover, again, a lot of these details so that you can mitigate and risk manage your trades. But this is how the stock market works and how the transactions work within. Now, there's a lot of intricacies. There's ways to buy, ways to sell, where to buy, commissions. There's all types of stuff you want to learn. And I recommend learning that in the next few modules. All right, that's going to help you out quite a bit. Okay, so that is the stock market, and that's how it works. So let's go to the next video.